in Miami, a building or an association called Surfside Champlain, I think is the way you pronounce it, Towers South, actually collapsed. And it collapsed because, and correct me if I'm wrong, because there were maintenance items that needed to be taken care of. There were issues that needed to be corrected, and the can was just kicked down the road for years and years. And when I saw what happened, the building collapsed, and it was literally a pile of rocks and rubble on the ground, like the whole structure collapsed. And I'm understanding through the grapevine that now lenders, because of that collapse, are asking for different information from associations before they allow a borrower to close.
You pretty much hit that right on the money. The building collapsed because of, in the industry, what we call deferred maintenance. It's maintenance that the association was aware of and did not perform. In the case of Champlain Towers, it was principally a financial problem. Their homeowners, it's a condominium building. They couldn't agree on a special assessment to pay for it, and so they neglected maintenance for years. And ultimately, it cost 98 people their lives, and 136 units, I think, in the building were destroyed.
The lender typically asks for information from the condo association, like the master insurance policy and stuff like that. And what I'm hearing is that now lenders are requiring information from condo associations that they were not requiring in the past. In other words, they're looking at it in terms of underwriting the deal. So a buyer's loan could be turned down because the condo association's not doing what they're supposed to do.
Yes, the lenders have ratcheted up the requirements, the disclosure requirements, by a magnitude, I would say. Some attorneys have said that the requirements are draconian even. CAI, that group you mentioned earlier,
yep,
that I'm a part of, they surveyed management companies, and 9 out of 10 of the respondents said that they were uncomfortable or feared the exposure of liability from answering the lender's questions. 25% of buyers have been denied loans because of delayed questionnaires or questions that are not being answered. Management companies are not willing to put their neck on the line, and board members are not willing to put their neck on the line either, because there are subjective questions in there, like, could the building be in violation of any future deficiencies, any future building code deficiencies? Well, who can know that?
I understand that in many cases they're asking for 6 months worth of board meeting
That's
minutes,
correct.
so they can see for themselves if people are talking about something where the can's being kicked down the road. And they're also asking for a reserve study, which I would assume will be prepared by an engineer or someone like that estimates, here's the cost, here's what's wrong, and here's the cost you need to save this year to prepare for things 3 or 4 years down the road. Are those two things the additional things you're seeing?
Yeah, that's correct. The impetus is coming from the group of lenders that function under the government umbrella of loan guarantees, and that would be the Federal Home Loan Banks, Fannie Mae lenders, Freddie Mac lenders. Okay, a lot of other lenders are following their trail, even though they're not under the government insurance program. Very few banks hold mortgage notes.
Right.
They resell them, and they resell them through organizations like Freddie, Fannie, Federal Home Banks.
Yep.
And so those people are setting the standards of what kinds of securities they'll trade. And so the lenders are asking us questions about deferred maintenance, about structural issues, about unfunded reserves. And lenders have always asked for financial statements of associations. They've always asked for insurance statements and had questionnaires. Some of them are 5-7 pages long. And so now the big shift, as you mentioned, has been now they're asking for things that they've never asked for before. They want 6 months of board minutes. And I can tell you, lots of volunteer boards do not have 6 months of board minutes. There's a lot of shortcomings in the documentation area.
Yep.
Okay. They're asking for a current up-to-date reserve study.
Yep.
And some condominiums and common ownership buildings have reserve studies, but some don't, or they're out of date. Whether you are going to buy a condominium or whether you currently live in one, you should be asking your board if they have those documents available, because when the lender comes to us, they give us 5 days to answer.